we're heading into a much higher rates environment in terms of the actual impact and the actual decision making that needs to be taking place by a lot of these companies that are then going to have to up their capex budgets to conduct these operations in an environment where their cost of capital has increased significantly. So do you think that there is too much of an expectation that we are going to see these things happening, too much of an expectation that we are going to see huge rollouts of new, fresh data centers that are going to drive the demand, or at least for, say, the next 12 to 18 months?
But I think one thing you have to note is that it's not going to be just a pure addition because of the new CPU. It's basically you're switching from the older CPU to the new CPU, and the difference there is that because of the more favorable supply and demand situation, the ASP will likely be higher. So if the companies do change to new CPU, yes, there's going to be an incremental increase in capex, but it's not like there's going to be a very large delta. But on the profitability side, it will be very helpful because the ASP is will be a lot higher than oversupplied old model. So there's that point, but at the end of the day, it's very difficult to predict when the demand will exactly turn and when the situation will get better. But the valuation is such that it's at a fairly low point for these companies. So you have to be willing to commit to a little bit more long term. If you're trying to make really accurate call, it will be very difficult.
And having said that, I do want to show our viewers the 3-month comparison chart for Samsung Electronics and SK Hynix and really show the delta that you keep mentioning in your notes as well for SK Hynix, more volatility in terms of the price action. But you say that long-term investors will likely gain here. So could you elaborate on perhaps which one is a better pick here?
I personally, prefer more fundamentally stronger company. Besides, the share price, but also if you consider the valuations at the current point, then our pick is more with Samsung Electronics, given its stronger balance sheet. Because at this point, SK Hynix and Micron do have, they're going to face more negative free cash flow, and they will have more demand on their balance sheet. So that's not a place where we want to be, and that's going to also have an impact on their competitiveness going forward. But nevertheless, the market usually wants to go with a pure play. So when that turn happens, it's likely that SK Hynix and Micron, the pure play guys, will have a higher delta. But if you're looking from a more longer term, fundamental competitiveness perspective, I would actually think Samsung might be a better pick.